And let me show you what I have in my investment accounts. And please keep in mind that this is not in any form of financial advice. I am just showing you stocks, ETFs, and index funds I have in each of my investment vehicles. So in my TSP, I have a 50% C fund and a 50% S fund. I'm probably going to reallocate it to 60% C fund and 40% S fund next year, but it'll depend on how these index funds perform by the end of 2023. If you don't know what a TSP is, it is the federal government version of the 401k. In my traditional IRA, 57% is in VT Sachs or Vanguard Total Stock Market Index Fund, and 35% of my traditional IRA is in Google stock. My Google stock, since the end of 2022, has earned about a 25% return. I'm probably gonna have to sell some of this by the end of this year to diversify a little bit more. And I bought Google when the share price dropped below 100 bucks. And if you've been following my channel for a while, this is one stock that I purchased heavily in 2022. I made a video about that last year and people just laughed at it and saying that this was the worst investment I've ever done. 25% return isn't so bad, right? And 8% is sitting in Fidelity Government Cash Reserves, ticker symbol FDRXX, because it's paying me about 4.8% in interest every year. And that money is sitting there so that I can make the Roth conversion in 2024. In my Roth IRA, 32% is in VFIAX or Vanguard S&P 500 Index Fund. Another 32% is in VT Sachs or Vanguard Total Stock Market Index Fund. And 25% is in Google stock. And again, I'm probably gonna have to take some profit out of Google and invest in something else. And about 10% is in PayPal. And I'm actually really debating, and let me know in the comment section down below what you guys think about PayPal. I'm actually really debating about whether I should put more money in PayPal. And I wanna read a little bit more financial reports before I make the final decision to buy more PayPal shares. So what could end up happening is maybe take some profit off of Google and buy more PayPal. That's, I just need to do some more study and see what happens. And my other account is my HSA. And I keep my investments pretty simple. And I have about 80% in the Vanguard S&P 500 Index Fund, and the other 20% is in between SCHD and QQQ. Again, just because I do it, it doesn't mean that it's right for you. Please do not ever blindly invest or it's gonna bite you in the butt later on. And in one of my taxable brokerage accounts, I focused this one on growth investing. And the biggest position I have is actually Meta with 31%. And I made a video about Meta last year too, and people just kind of laughed at me in the comment section. I still think Meta is extremely undervalued, so this is gonna be a tough one for me. It was crazy because Meta was trading at 90 bucks a share in October 2022. I just bought a bunch of them and now it's pretty close to 300 bucks a share. So anyway, the second biggest position I have is Dropbox, and I've been using Dropbox forever. I use it with my clients, I use it for my business, but it's grown a lot over the year. And I probably need to sell some of this stock in the coming year because it's grown over 37%. And this is still considered a small cap stock. So I need to just diversify a little bit more, right? And the third one I have is Tesla. And I've owned Tesla since 2018 when the stock was at dirt cheap. And I've sold quite a few shares over the years to diversify a little bit more. And I'm really glad that I did that because it was getting so heavy just in one stock. And it's, that's never a good thing to do. And the rest of it is in cash right now because I'm doing some research to invest in some ETFs and index mutual funds. And I'm pretty heavy on index funds already with my retirement accounts. So I thought it was okay to invest more in individual stocks. It is extremely risky to invest in only individual stocks, and it's not something that I like to do. Not the majority of my money anyway. And in my other taxable brokerage account, I invest only in dividend stocks. And this is the worst performing portfolio so far in 2023. It's down by about 20% year to date. So I need to make some adjustments towards the end of the year. I might have to do some tax loss harvesting as well. And if someone tells you that they never had any bad investments, I bet you they're lying, all right? The biggest position I have is actually Verizon at 32%. This stock is still in the red going into 2023. The dividend yield is nice, but the stock price itself has been down over the last 2 years. And the second biggest position I have in this portfolio is Walgreens Boots Alliance. And I'm not really sure the direction this company is heading right now with their I know I read the CEO and CFO just quit within the last few months, and I'm holding the stock right now just to see where it goes, but it's definitely not in a good spot right now. And the third biggest position I have is this is something that I just started buying recently is Target. This is a dividend king that has raised and paid dividends for 51 straight years, and I plan to hold the stock for a very long time. And the fourth position is Raytheon. And this is actually one of the first stocks I purchased in 2020 when the stock fell by over 50%. Now it's like performed 70% total returns. And the next two stocks are Pfizer and JP Morgan Chase at about 8% each. I've been holding these stocks for a while as well, and I'm not looking to sell them anytime soon. The next account I have is my daughter's 529 college savings plan. And I've been investing in the same index funds over the past 11 years. One of them is the S&P 500 index fund, and the other one is the growth stock index fund. They have each performed about 12% annualized return for 11 years. What that means is that the funds gave a 12% return every single year. And I plan to just dollar cost average every month and let the investments ride. And the next account I have is my daughter's UPMA account, or also known as the gift account for minors. The only investment I have in this account is the Vanguard S&P 500 index fund. I just dollar cost average this investment every 2 weeks, and I plan to just let the investments ride for the next 7 years. This account automatically becomes hers when she turns 18 years old. And I do have to pay capital gains and dividend taxes every year for this account. And it is a gift account, so it's something that she can use to buy a car, make a deposit for an apartment, or buy furniture with the money in this account. I am in the process of doing research on these index funds and how the market could potentially shift going forward in Q4 2023 and Q1 2024. Something else I'm paying very close attention to is how the Fed is going to potentially raise more interest rates. If I had to take a wild guess, they're probably going to cut rates during the election year 2024. But it makes sense. 2024, the election year is just around the corner. And I could see some recoveries happening for my dividend portfolio if the Feds decide to cut interest rates going into 2024. But we'll see what happens. And for those of you who are just learning to invest, I encourage you to check out my index fund videos to understand how they truly work. They're free. They're completely free for you to watch. Don't invest in something you don't understand, because that's called gambling. I spend hours reading companies' financial reports to understand their business models. In the next segment of this live stream, I'm going to go over my investment plan going into 2024. So be sure to subscribe if you haven't done it already.